Most traders think that Forex being open 24 hours a day is an advantage, but in reality is one of their biggest enemies of their profitability. Because when you have a market that never sleeps, you also have endless opportunities to trade poorly, to enter during low volume hours, and to give back in minutes what you earn during the morning. In this video, I'm going to show you which windows of the day have the highest probabilities, where institutional money actually moves, and how limiting your trading to those moments can exponentially improve your results and give your freedom back. If you're tired of being glued to the screen all day, this video is gonna change your way of trading. One of the main issues before we get into the trading view, before we get into the real analysis that I'm gonna be showing you, and the key concepts or key takeaways for you to be able to have a clear schedule and a clear plan for your trade, is that majority of traders, they don't even know if they're trading reversals, if they're trading continuations, and how I journal my trades so I can have an effective plan to follow, and not only to follow, but to know if that plan is actually working. I've worked for the last 6 years with thousands of traders, and something as simple as that, I've seen that it's a common issue with a lot of traders, and I cannot even imagine even outside there how many people are actively trading without being able to classify what sort of trade you are actually taking, continuation or reversal. And again, I still see a lot of issues when it comes into journal all these positions to ensure that you truly have an edge in the market. And why is this so important? Because having an edge in the market is not just placing trades, it's having the ability to spot that your continuation trades have a 40% win rate and a 1 to 3 risk reward versus your reversal trades have maybe like a 1 to 1, and therefore maybe they're not worth taking. So whatever data you have personally, and no matter what strategy you have, it's extremely important to have that calculated and with a plan. Now, I'm not gonna bore you in this video of my almost a decade of experience in the markets, of like how was my beginnings and how I, pushed through all those moments. But something I can truly tell you is that at the beginning of my journey, there were a lot of situations where I was placing trades before, for example, going to sleep. And again, I'm not judging anyone. Like, if this is something you do and it's working for you, amazing. Like, if you place a trade, fully forget about it and just see what happens when you wake up, it's amazing. But something, at least for myself, is that at the beginning of the journey is something that led me to a lot of anxiety, led me to a lot of ambiguity, right? When it comes into placing a trade and having to go to sleep and then not sleeping properly because you put some money into the market and all that stuff. Why is this so important for the video of today? Because in this video, I'm gonna be making sure, as I said at the beginning, that you take away what are the key elements that have gave me the most freedom on trading. A lot of people want to be a trader for what? For freedom. But then you find out that that freedom goes away the moment they start to stick to the screen 10 hours a day. So it is very important to have a predefined plan. I do not enter, for example, trades before going to sleep. That's my style. I currently live in Dubai, so based on my time zone, this is more for Asia to develop what I call the liquidity of the session. So now we're seeing the screen, we're seeing GBP USD, as you're seeing on the 15-minute time frame. I have transitioned into an intra-session trader, meaning I open and close positions in a short period of time, but due to my previous background, I am also a swing trader. So how do I manage this? Well, in this video, I'm gonna be showing you intra-session trading, but personally, I have a swing trading account and I have an intra-session account. So in today's video, I'm going to be focusing for intra-session traders and the ability to spot movements in the market short term to have a very good risk to reward during a window of 1 to 3 hours of expansion of price, but just being able to execute your position in a very short key time window so you don't have to spend 9 to 10 hours in front of your screen. As I said, GBP USD M15 time frame, that should be where you mark your structure, where you mark all the stuff that goes along when it comes into your pair. But before anything, before getting into a trade that I'm going to be showing you, which you can now take notes, it is a New York reversal setup. Okay, extremely important that you understand what you're trading so you can take note, so you know, and then can back test the information that I'm going to be giving you in this video, so you can actually test it and see how that plays into your favor. So before we get into the trade, which I'm gonna be breaking it down with you step by step, I want you to do an exercise when you are basically alone by yourself, backtesting price, which is focusing on these key time windows that you see in here on a gray area. This is the key time windows where I'm expecting you to spend time. And why is the reason? Is because if you focus on them, and again, I'm not trying to go 3 months back in time, I'm not trying to cherry pick any sort of a scenario. This is 11th of November, last week, which happened in the market. And I'm trying to show you that when we are able to pick the right areas, an expansion happens in the market. And if you focus on the gray areas that we have in here, gray area, expansion. Then we also have a gray area here and we have a reversal. Then price goes into here, gray area, and comes with volume. Then we have a retracement and then push and then gray area and again pushing the market. Why is this so important? Because as traders, we want volatility. We want volume in the market. So what we want to ensure is that when we are entering on those key moments, that our strategy is paired with volatility, because it's extremely important that we ensure that there's a statistical edge behind our trading, that when we are placing a trade, there's a high chance that the next 3 hours you're gonna get an expansion, as we were seeing on this little example. So I'll highly recommend after this video to go yourself and practice this exercise and ensure that where price is moving at those given times of London and New York, you're actually backtesting what's going on in the market and seeing those expansions in time. And focus on a very small key time window. Focus on 1 hour. If you have to span it to 1 hour and 30, test it out. But at the beginning, just focus and I'm just gonna be trading if it's London from 9 a.m. to 10 p.m., for example, Madrid time, and from 3 p.m. to 4 p.m. if it is a New York window. And just those 2 hours can still provide you with a lot of trades and at the same time become extremely restricted as a trader. But now, as promised, let's go step by step and dissect the opportunity that we had in the market last Wednesday. It was a phenomenal trade, a New York counter trend and reversal. And we'll go step by step showing you the cases and how I was able to spot this position, and not only myself, but a lot of people on our community. So in here, okay, first thing, we're gonna mark our areas of supply. Of course, everyone in here knows already what's the supply area, and if not, I can also do a video specifying a bit more how to actually draw them. So let me know in the comments if this is something that'll be useful. So what do we do in here? We need to mark or understand where price is sitting. Right now, what we're doing, we're sitting on a bearish market, right? Lower high that created a lower low, and this just made a retracement into supply areas. Now we're seeing that price is actually moving with the same direction or overall direction that we have on the higher time frames, which is those pushes to the downside. But at the same time, of course, we know that price can still have small movements in price, right? So even though we're still creating, as we're seeing here, these now lower highs and lower lows, which are aligned, as I said, with my main push, we still will have areas that price can induce, that price can mitigate, and therefore we can potentially still capitalize as an intra-session trader in a short move. But the importance is to be able to frame this, is to be able to understand that this position that I'm going to be describing, for this exact reason, it is a counter trend and a reversal trade. So once I have that in place, key time windows will be extremely important. But before we even focus on that key time window, we need to be able to spot high probability areas of reaction. As you can see, we already spotted the supply area that I draw in here, and now we're also going to spot the demand area. Now, what is this? This is a supply area on the past, right? We see that this area in the past was all created a very important push to the downside, as we can see, and then after that price left some intention to go bearish, as we can see, but after that reaction it didn't follow through and then it broke higher. Not only broke higher, price made a test in the market and then went into creating new higher highs to meet in these supply areas. Of course, from a bearish perspective, our objective is now met, meaning we are right now on a bearish market. I don't know what's going to happen next, but I know what I can objectively say is that it's bearish. And from there, I need to start building my case. So where is price sitting? Well, I can see price going to down movements, right? So is it getting closer to this area? Yes, right? So this area, as we can see that it tapped in there, it is extremely important. Why? Because this is the area that before in price the market created a test, as we can see, and then went to the upside. So this area can still have orders of what I call supply that turns into demand, and therefore price can still give a reaction in price. Now, I'm not expecting a huge move, but I can expect a short-term move if price and time is aligning correctly in there. So now we've predefined our structure and our points of interest. We're gonna go to the intra-session time frame that we were discussing in here. So for the intra-session time frame, what are we seeing in the market? Well, we can clearly see, as I mentioned, that first of all, we have this area of demand, which it's area extremely important because in the past it tapped, gave a reaction and pushed higher. Then it has a low here that potentially, right, can get induced on the way down. So now we need to classify what is the market doing. As you guys know from my YouTube videos, there's something that we have or we call the liquidity cycle, which is the 3-step that can validate that a POI is going to give a reaction. So in this scenario, where is my buildup? I'm having a buildup of liquidity all the way from an upper area in here. And then I also have a little or smaller one in a smaller time frame here. But we're gonna focus to make it simpler on what happened in London session. As we can see in London session, which is 9 a.m. Madrid time, okay, price just made an inducement of an Asia high. And from there, look the amount of volume that was moved into the downside. Now, why is this important? Because you can also say, people that are a bit more advanced, well, Alex, we also induced this low, right? So why that didn't give the reaction that we're expecting? Well, because the session opened here and therefore that volume that you can see in price, which is what we're looking for. If you remember the exercise that I want you guys to do at the end of this video, is how volume hits on your favor towards bearish pressure. I will not be interested on a bearish market as we're having to try to just catch this small pullback in price. Also because the time is not aligning. So between London and New York, I can sit in my hands and be relaxed, knowing that what I will need is not just an inducement. I'll need the inducement with the correct time and with a buildup. And this is what I call a buildup, an inducement, and a mitigation, which is the 3-step of a liquidity cycle. So in here, we're getting a buildup of liquidity, right? We're getting those lower highs and lower lows that are building up liquidity into what we call a trend line in price. Then I need an inducement out of my second step, which as we can see in here, we are extremely close to this inducement. And number 3, I'm gonna need a mitigation. And as you guys know, the mitigation, we don't expect it to be random. We expect it to be on one of our points of interest that we can qualify as a valid area of interest or point of interest. So in this case, this area or demand that I marked there in blue, it is a qualified point of interest because in the past, we know that supply couldn't beat, let's say, demand and therefore create new lower lows and actually broke higher, allowing the market to, after this test, look the major push that happened in the market. That's telling you that below now this area, there's gonna be still orders in the market to be fulfilled. So this is just also a quick tip on how to actually read supply and demand or area of interest that I think will be pretty helpful. So as I said, 3 steps: build up, inducement, mitigation. So if we can actually induce this low and mitigate further this area, that will be a phenomenal, okay, liquidity phase. But we still need to understand that we're in a bearish market. Everyone can see here with a bit of experience that after tapping into supply, okay, we can see how the market tapped into demand, failed to create new higher highs, and after running this liquidity, price broke structure, right? So we are still, or now we're falling into a bearish market on a 15-minute time frame, and also we have what we already discussed, the daily or the higher time frame being still bearish, aligned on purpose. But I will not speak about the higher time frames on this video. Let's keep focusing on the reversal trade. Now we can go to M5. M5 should be the home for you as an intra-session trader. M15, you can mark all of the things that I was marking, areas of interest, liquidity points, and all of this. But as an intra-session trader, it is extremely important to have M5 as a good place to understand price action, see how everything is moving. So as I said, we can see, what I was explaining before, we're having also a small liquidity cycle in here with lower highs and lower lows, building what I call a trap in the market. If you're new to the channel, you will see that I have a video that speaks about the 2 most common retail traps. which is trendline traders, and breakout or break and test traders. If you're any of those, I will highly recommend to check that video because it's gonna open your eyes into a new way of checking the market or seeing the market. So in here, lower highs and lower lows, creating that push in the market. And now we're coming into the gray area. So the beauty of having those key time windows is ensuring freedom. So ask yourself, is this what you got into trading for? I got into trading for freedom. I got into trading to choose my time, to choose what I want to do with my life and not have someone that is just pushing me to do things. So I want to make sure that when I'm a professional trader, I'm also applying those same parameters into my trading. So in here, look the key time window that I'm mentioning, okay? London made an aggressive or bearish push. And now we're coming into New York, which is the gray area that you see in there. So now you'll be sitting in there and you're not sitting for the whole day, you're just sitting for the key time window and it's actually aligning. And this goes back to the understanding of the importance of knowing your models. Knowing if something is framing for a continuation or something is framing for a reversal. Because when I see something like this, my mind is not thinking of continuation trading. My mind is thinking that as the liquidity is being built, I have a low there to induce, I have a point of interest and I am coming on the correct timing, there is most likely that I have what I call a reversal trade, which is a point in price where it will give me a 1 to 3 trade. Now the trade can actually go even to a 1 to 20 later on, but it's not inside of my model to hold that into 1 to 20s. It's inside of my model that on a counter trend and reversal, I stick to a 1 to 3 trade. Okay, so now let's keep moving and see what the price did in here and how we should have actually interacted. Look, right now we just opened the session. This is gonna be where you're gonna be interacting with time and price. After this, we're seeing this bearish movement, right? Check this. Should we be now placing a buy limit, interacting or trying to buy? Definitely not, okay? It's extremely important that we also remain objective to what price and volume is saying, and we need to have confirmations, okay? This is what I call my lower time frame confirmation, that once price taps into that area of interest, that's when I go into M1, okay? This is my step-by-step protocol, so I can know exactly when I should go for M1 price action, when I should go for M5 and all of this. What do we see right now? Look the volume of the session, right? How many people do you think we're gonna have a bearish price action, right? For let's say New York session, a lot of people, because a lot of people see this as a trend. They see as a trending price that just will keep now doing a new lower high that will create a lower low, and therefore the session open bearish and therefore will continue bearish. But as we know, the only thing we're doing here is building up a trend line. We're now taking out the liquidity from the left that we were speaking, and we're mitigating further the orders that are laying into this important block in price of demand. So we just need to wait. And why do we wait? We wait for a confirmation on the M1 timeframe that can allow us to understand that price can actually move farther. Now we already have a confirmation, okay? There's a lot of traders that like also to enter already when you have a break of a structure. I think this is not bad. I just think this can actually be a bit misled, as sometimes you will see that price will go a bit farther, mitigate this block, and then continue lower. So there's something a bit more advanced, but we'll go step by step to show you and to get a bit more of confirmation. So to get a bit more of confirmation, we can actually go and see we have a follow through in price action to ensure a bit more of volume. This moment is extremely important because if this area holds and gives a new high, we can potentially have what we call a two-leg protocol in M1 and therefore be looking forward to buy. So we can see how the market now slowly is facing that doubt and boom, okay, right now we've just created a new push in the market. So right now we have a two-leg protocol in price. We're seeing that change of volume. You see how we're coming on a bearish market. Now we're actually seeing that change in price action that can lead into executing. For someone that is still not profitable, you should not think further. You should have a protocol in place, okay? Meaning this is a reversal setup, is meeting my key time window. It has a liquidity cycle, which is the build-up, inducement, and mitigation. I have a lower time frame confirmation. I'm just gonna go and look forward for a execution in here. You can enter, of course, with a buy limit, and you just cover the low of the previous higher low that created a higher high, and you can go for a simple 1 to 3 in the market. There is ways to have a bit extra confirmation by understanding inducements in control, but I don't want to make this video about inducements in control. This is something that you already got on the previous one. I just want to ensure that you guys are understanding what is a counter trend reversal model. So in this scenario, you can see how price after this two-leg protocol gave a new push to the upside, and from there, price right now just met our 1 to 3. Now, Alex, it is efficient to cut on a 1 to 3. Should we actually hold a bit longer? In a scenarios like this one, okay, we have what we call also a break and test, which we know a lot of liquidity resting there. So if some people want to push it, let's say a bit farther for like almost a 1 to 5, it is okay, because there's actually what we call, and you guys know that follow the channel, a objective in price, meaning we want price to be driven into the next liquidity pool. So after this build up inducement and mitigation, we know price could and potentially rebalance into this area here. And after this area, price can rebalance into the next area and have a potential reaction again. So this is extremely important, but this is a bit more advanced. And that's the reason why at the beginning, I'm not trying to give you all these technicalities. I'm trying you to go and be profitable. And therefore, try to not go extremely difficult, but understand and close everything on a 1 to 3, because that's all you need. You need to have a setup that has an edge and that is profitable on a 1 to 3, more so at the beginning. And also understanding that on a counter trend or reversal trade, you shouldn't be shooting for the stars or for the moon, right? You should be shooting for very objective areas of liquidity in a short term. And as you can see also, look, how long did this take to hit like a 1 to 5? A 1 to 5, it took 2 hours. But the 1 to 3 that we were speaking about, okay, let's put it here on 1 to 3. The 1 to 3, it took 28 minutes. I don't know if I mentioned it during this video because I forgot after speaking for a long time, but my take profit of 1 to 3 on average, and this is calculated, it hits between the first 30 minutes to an hour and a half. So in that window of time between 30 to an hour and a half, that's where usually my TP1 gets hit, most likely on the 30-minute window to 1 hour window than the 130, but that's my window that I've seen that I hit majority of my TP1s, or in this case, for example, full TP has been a reversal trade of 1 to 3. So you can see, if you calculate how long it took you to make the analysis, staying on the window for like an hour, executing, and then of course you can even forget about it, just put your 1 to 3, but if you even stay on the session, it's less than 2 hours. So this is the power of intra-session trading, is allowing yourself to know when to sit on the market, when to look for an opportunity based on the model, and therefore executing objectively. And then can you grow from there? 100%. That's the beauty of trading. That's the beauty of any career, that there's levels to it and you can always keep upgrading them instead of just closing 1 to 3. Try to understand why price is stepping here on a 1 to 5, why price should pull back from there, where it should stop, and all of these kind of like nature of price that I like to call it, that is one step even farther. The idea of the video is not to try to tackle all your trading issues in one video. It was the idea of tackling freedom versus trying to stick 10 hours a day on the charts, as I know so many traders that spend 10-12 hours on the charts and they're not really progressing. Okay, so if you spend long time on the charts but it's to study them, it's one thing, but if you spend 10 hours a day to trade, I think it's not going to play on your favor. So try to stick to short windows, try to have your freedom back and spend that time doing what you love. And if it's studying trading, study trading. If it's going to the gym, go to the gym, whatever it is. If you're new to the channel and you're liking this sort of content, subscribe, because I'm going to keep bringing to you more and more content as we keep growing this channel. So see you into the next video.